What's up, guys? It's Brian from Hashware Hub. It's about 9:56 p.m. Eastern Time, March 14th, 2018, and we got a brand new Bitcoin trading video coming to you. But first, if you're new to us, hit that subscribe button, hit the upvote button if you're on Steemit or DTube, hit the notification bell if you're on YouTube. But definitely, no matter the platform, make sure you subscribe to us. We do lots of technical analysis here, and I think it's pretty good. The comments seem to think the same thing. So let's get right into it. Oh yeah, one other thing, kind of a moment of silence here for Stephen Hawking, who passed away. I guess it was it today or last night? I'm not exactly sure, but this morning when I woke up, I found out the news. Really brilliant physicist, philosopher, all sorts of other things. Super talented guy, and really, I'm actually pretty saddened by it. I followed him and read a lot of his books and stuff like that. So if you guys don't know who that is, definitely Google him without a doubt. He's a pretty famous physicist, to say the least. So let's get right into it. You know, we are all beings, I guess, of this physical world, regardless of the form of matter. So, and so is the market, right? So that's why we have our friend Fibonacci, and Fibonacci is just the laws of nature. And so, one of the things we can look at right off the bat in that matter is, hey, let's say you wanted to get an idea of where this market was going to come down to, okay? And a very simple tool to use is just a Fibonacci retracement tool, and we drove from the low to the high, and would you look at that, the 0.618, which is about 8,166 or something like that, okay? The market basically landed right on top of it. Look at that, okay? It's not rocket science, it's just laws of nature. And us human beings barely have the capacity to go ahead and try to model it. So that's really what trading is all about. Another comments I tend to see is every once in a while I see comments saying, "Oh yeah, another channel, you know, like the other ones, it could go up, it could go down." And yet that's exactly it. That's exactly the point. It's exactly the point. Yeah, it could go up or it could go down. And like I've been preaching for, I guess, at least the past few videos, is that you need to know when definitively it's going to go up or down, and by what amount does it need to go up or down in order for you to get into a trade. And that is the art of trading. And if you are stuck on trying to figure out if it's going to go up or down, you will never win. I've never seen it happen. And if you can do it, start up your own YouTube channel. I'm sure you'll have several 100,000 subscribers very quickly. So if you guys are looking for a up or down analysis, you're not going to find that here. And as I mentioned before in the past, if you find it somewhere else, you should be extremely wary. So, you know, that's exactly the point. Yes, the market can go up and it can go down at any one point in time. Okay? So yeah, so yeah, the market ended right at this 0.618 retracement, right? So now what's going on, right? Let's look at this a little bit deeper. Why can't I delete it? Here we go. Let's look at things a little deeper, right? So remember our bearish count. A bearish count, we've always been saying that this is, you know, this is a large A, a large B, and a C coming down, right? And what we've said before in the past is that, you know, if we just do something really, you know, simple and dumb and say, okay, if the leg down is going to be the same as the leg, is the first leg down, in other words, if the A leg is going to be the same size as the B leg, my God, if the A leg is going to be the same size as the C leg, then where we're gonna end up? And right now it's about 6,534. Okay, right along that basis, right? So that's the first thing I want to say. Let's zoom in a little bit more. Okay, the next thing is this: do we have 5 waves? Well, you know, you can count this. You can almost count this as 5 waves already being done, but it doesn't look good, and I don't like it, and it breaks some rules. So the way in which I'm counting it is like this, and this is on a 1-hour basis. Yeah, it's on a 1-hour basis, and the way we're counting it is like this. We have 1. These are the big green line, big green numbers. 1, 2, 3, 4, and 5. Okay. 1, 2, 3, 4, 5. as simple as that. Now, what does this really mean? Okay, so I'm going to show you some tricks here. There's a rule of alternation within Elliott wave theory, and basically it says if the second wave retraces a lot, the chances are the fourth wave will not retrace a lot, and the opposite is true too. Okay, or if the second wave is like a simple ABC, well then the fourth wave most likely be some sort of complex correction. All right. So what did we have? As far as the second wave is concerned, the second wave, how much did it retrace? Right? How much did it retrace? Let's take a look. The second wave retraced to the 0.618 area. Okay, right here, 0.618 area. So that's pretty significant. All right. I mean, yes, there could be more significant, but that's pretty sufficient. All right. So now this is putting things more into context. Okay, we're trying to put things more into context. What happened? We had our A, we had our B, we had our C. Right. The market wanted to come down and break through the bottom of this bearish flag, but then it came up. It had to come up in order to hit its 2. Right. Okay, in order to start its wave down, its wave 3 down. All right. So remember the 0.618. Now, if we go ahead and we take a look at the third wave, right? The third wave. Let's go and do that. So if we measure it from the top of the third to the bottom, come on, from the top of the third to the bottom, I believe, of the third, right? We believe this is the bottom of the third. Then where could this possibly retrace to? In other words, where could the fourth wave retrace to? So there's no, it's not just by chance that I drew this 4 directly on the 0.382 number, which is 8,526. Okay, it's not chance. This is a measured. I almost said a measured move. A measured move is different in the market, in these markets, but it's a calculated number. So now it doesn't need to make the 382. It can make the 0.236, right? It can make either one of these, right? But right now I'm just keeping it out of the 0.382. So that's how it's a way to go ahead and make a target. All right, that's a way to go ahead and make a target. So next, I want to show you is this. Let's look at things not on a retracement basis, but let's look at things on a motive wave basis, right? So if this is wave 1, right, and we go up to wave 2, well, where could we assume wave 3 was going to get to? We always assume that wave 3 is going to at least get to at least the same length as wave 1. Okay, it's an extremely conservative approach, but I'm an extremely conservative guy. So, more times than not more times than not, but very frequently, the third wave will make it to the 1.618. But for trading purposes, I like to be conservative, right? So that's why I always looked for the 1-to-1. Remember, the third wave cannot be the shortest. Doesn't need to be the longest, but it cannot be the shortest. So if the third wave goes ahead and it makes it at least slightly past, the territory of 1, well, then we at least know it's bigger than wave 1, and then we're already satisfied Elliott wave theory. Then wave 5 can be whatever it's going to be. Right? Wave 5 could be huge. Wave 5 could be tiny and minute. We don't really care because we still are meeting Elliott wave theory. So normally we would say, okay, the wave 3 would be waiting for it to get somewhere around this 8,340, and the wave 5 would be waiting to get around 1,618. Okay. Now, the wave 5, we have it drawn right here around, let's call it 7,490. Now it doesn't need to be there. It could be up here. It probably can be somewhere closer to the 1.618, about 7,634, right? So that's where we think things can go as far as this wave right now of this larger 1, 2, 3, 4, 5 wave. In other words, this green wave right here. Now, we'd be looking for some sort of correction here, right? I'm looking for some sort of ABC correction inside here, or ABCDE, some sort of correction inside here, right? What we may end up getting is some sort of ABC correction that then morphs into like some sort of weird fifth wave, right? Some sort of descending triangle, a small descending triangle, which is super common. It's very, very common, right? But as the more of this thing falls off, if it starts falling off, well below here, then possibly, we may need to change the count up in here just a little bit. But at the very least, I'm still bearish. At the very least, I still think things are going to fall down. I still think things are going to fall down. So I want to go ahead and I want to look at volume. Should we look at volume? No, let's not look at volume just yet. Okay. So yeah, we want to see some sort of ABC coming up here. As we have the ABC coming up here, we also want to see volume dropping off. Okay, and I'm going to get to that in a second. So let's take a look on a more minute scale, right? So we have a 1, 2, 3, 4, 5. So let's look at some of the subwaves that are just within the 3 wave, right? This 3 wave. And the way we're counting it is like this: 1, 2, 3, 4, and 5. Okay? And we can do a similar situation here, right? So we can go ahead and let's take a look at how much wave 2 retraced. Right? So wave 2 retraced to 0.786. Okay, that's quite significant. So what does that mean, class? If you remember, sorry, class, if you remember, wave 4 is only going to retrace a little bit. So that's why I really think that this is wave 4 right here. Okay, let's go ahead and look at wave 4. Here we go. Would you look at that? Wave 4 retraced to 0.236 right here. Okay, remember the rule of alternation. Right, this one was very complex. Wave 2 was very complex. Wave 4 is as simple as you can get it. As simple as you can get it, and it may actually be happening right here. So, yeah, I'm watching to see if this thing is coming down a little bit more. So, yeah, I mean it's pretty straightforward as far as that's concerned. Let's look at the extension, right? So we have of this small blue wave. Okay, so of the small blue wave, wave 1 pretty much stopped at the extension 1, right? Excuse me, wave what am I talking about here? Wave 3 basically stopped at the same size, in other words, extension of 1 of wave 1, right? It's basically stopped at it. The wicks all came down below, some bodies. It tried to get up above it, and then boom, it just plummeted right back down. This really just tells you there's a lot of sellers in the market. We also had these huge candles coming, this huge selling candle, sales volume candles come in here. Okay, that's the reason why this didn't really get any chance really to move back up again. Remember, we were looking at that retracement, right? Then we have the 1.618. 1.618. The market tended to stop right here, right? And then it's continuing to sell off, right? So this is a much bigger fifth wave here. But it doesn't make a difference. We already met the criteria for wave 3. So, hey, we're cool as far as Elliott wave theory is concerned. The next thing I want to go over is volume, okay? And how best to do this? This is not an excellent example of what you want to see, but it's close enough. So I'm going to go ahead and I'm going to look at this small 1, 2, 3, 4, 5, assuming that this is basically over. Okay. Yeah, let me just draw this down here. Assuming that this is basically over. So and we can have like an extended fifth. That's again not a problem at all. So when you look at one of the telltale signs of Elliott wave theories, in order to count the waves, is not necessarily the price movement. I mean, definitely, yeah, the price movement is really what most people look at. But it's great to have a confirmation of volume, and I never really spoken about this before. But it's really great to have a confirmation of volume, especially when you're doing this stuff live. Okay, when you're trading this stuff live, you really need to kind of get an idea of when not only the market's turning, but it's also taking a breath. And that's really what wave 2 and wave 4 is all about. The market's just taking a breath. It can't go from point A to point B. It just doesn't work like that. Nothing in nature goes from point A to point B. Meaning directly in a perfectly straight line. So neither does the market, right? So not even light. Light doesn't even travel perfectly straight. Light can be bent as well. So for some of you wise guys out there, light is Stephen Hawking actually would tell you, no, at the edge of a black hole, light gets all sorts of effed up. So, and maybe I'm going to use this analogy just because this had recently just run through my house, and that's called the stomach virus. And I'm sure many of you are very familiar with it. And that's the way I look at shorting, right? That the market is almost like regurgitating. It's this upheaval of like, I just get this out of here already. I just want this off my books. I don't want to be holding this Bitcoin anymore. Somebody get it off my books, right? It's this whole human psychology. And so yeah, okay, so we have this initial rundown, right? We come from kind of like slightly lower volumes, right? To slightly higher volumes, right? And then the market goes up, and the volume goes down, right? This is the second wave. The volume goes down, right? And then just as we start turning the corner, right? Just as we start turning the corner, let me go ahead and just draw this, right? We have this. Yeah. Okay. So it's almost like the opposite, right? It's almost like anti-correlated to the market direction, right? So then starts coming down. Remember, the third wave is always the most powerful wave, right? So, and the third wave of the third wave is the most powerful. So where are you going to expect to receive the most amount of volume, right? Is at the bottom of the third wave. And that's exactly what we have right here. The third wave of the third wave. Maybe if we zoom in a little bit more, we may be able to see it a little bit better. Okay? So let me just make this closer like this, right? And then you see the volume like steadily, increasing, right? I mean, basically exponential, right? You can see it right here. It just goes whoosh, right up. So you can see basically this is the third wave right here, right? And let me try to just count this. 1, 2, 3, 4, 5. Yeah. I mean, basically 1, 2, 3. Yeah, right. So towards the end of the third wave, we have this huge volume candle up. Look at these last two candles, right? Boom, a lot of volume and a lot even more volume, right? And this is the end of the third wave, right? And we have 4 and we have 5. Okay, see how beautiful that works? I mean, it's amazing. And then what do we have? We have the fourth wave, right? The fourth wave. What happens to volume again? Generally, it's going down. Right? Approximately. Right? Approximately. It's going down. All right? And then we see the volume picking up again in a very large fashion as we have this fifth wave. Right? It's coming back up again. I don't need to draw it. You guys can visualize it. So to me, it's almost like the market like, regurgitating. Like, you imagine you get sick, right? You get sick in the beginning. You're like, oh, I just need some Tums. Yeah, whatever. I just need some Tums. Oh man, I'm feeling so much better. Market's moving up, right? Feeling so much better. Then it's like, oh shit, what the hell was that, right? And then you're like, oh man, I gotta find a bathroom really quickly. And then this is when it's like the first huge like purge, right? And then you're like, whew, I got rid of that. Thank God it's freaking out of my system. I'm done. I'm feeling great. Oh yeah, cool. Yeah, I'll be over your house in 10 minutes. And all of a sudden it's like, holy shit, it's back and it's coming with a vengeance. And that's the fifth wave. Okay? That's the way I'm looking at it. I'm sorry for the analogy. I'm sure it's pretty graphic and gross and stuff like that. But maybe you guys won't forget it and you'll understand where I'm coming across from. And that's how the market reacts. That's how the market gets rid of things. Okay? I mean, even look at it now, right? I mean, it's extending this even more. Right? So we may need to recount this a little bit more, but I mean, it's extending this even more. I mean, crazy, crazy stuff. Maybe the third wave really is down here, right? Maybe the third wave is really here. We have a fourth, and then we have a fifth coming back down. This is on the blue side. That would move all these other ones down. Okay, not a good thing. But I mean, if you're a bull, but I mean, it's the market trying to correct itself. So, and just about all corrections are good. This correction is good too. So I think I've gone on a little bit too much. I want to go ahead and I want to go ahead and just update these resistance lines real quick. Okay, we updated some resistance lines on our Facebook page. It must have been a bunch of hours ago. I don't know, about 5-6 hours ago or something like that. And then we're going to update this again. It's not here because no reason to write it again. So on a 1 hour basis, what are we doing? We are changing this 1 hour, these coordinates right here to 8,379. This is the 1 hour resistance. 379. 379. Okay. On the 4 hour basis, we are changing this to 8,758. All right, so that's where we're at right now. Market's falling off. Okay, that's what it's doing. That's what it's doing, guys. So what we'd be looking to do, what I was hoping before was that in the event that this was the end of the fifth wave, that we'd be looking for the market to make some sort of ABC coming up, possibly test the 1 hour resistance, possibly go higher to where this 4 was right here. But let's just kind of see how things go on, and we'll talk to you guys in the morning. Have a great night and happy trading.